Hello everyone, it's me again. We are going to go through the Lim and Tan client sessions on the 19th of Jan 2021. And as usual, we're going to talk about what STI is doing. And then we're going to go through performance sector by sectors. And if we have time, we will be looking at some stocks that has a potential chance tomorrow. Of course, if you are following the market today, we had a very strong bullish Hong Kong market where many are looking at the index charging past 29,000 points. And of course, who is buying? Rumors has it that China funds are buying into Hong Kong. And has this strong bullish momentum overspill to Singapore market? Unfortunately, it hasn't. Hasn't. Not a lot of the counters has gone up. I'm going to talk about those stocks sector by sector. So without further ado, let's look at the SCI index. So we have the index right at the resistance level. So it actually tried to break out here, and the yesterday was a surprise where Hang Seng was up, Shanghai was up, but Singapore went down below the resistance level. So it was quite a disappointing performance yesterday. No doubt that it closed higher, but we do see some, weakness, of course, compared to the regional market like Hong Kong and Shanghai. Of course, today we try to redeem ourselves with a higher movement, but towards the end of the day, we floated and then we closed almost flat. So going forward, what will STI be? Basically, after making comments, some negative comments, the overall charts is still okay, right? The uptrend is still intact. Is what is lacking is a breakout, a strong breakout to test 3042 resistance like the Hong Kong market. If you look at the Hong Kong market, the Singapore market is a huge contrast. You can see every day they have been, most of the days they have been going up higher and higher, having a nice white candle. Of course, the chart over here hasn't been updated. Let's see whether I have another version that get updated. Yes, this is the version that is updated. You look at Hong Kong today, is a nice solid white candle. Unfortunately, the Singapore market is a flat, long, some upper shadow, almost no movement. Okay, so let's look at what contribute to such a closing to STI. Now let's start with the banks. We are looking at DBS right now. So we have DBS. The overall chart still looks okay, resting at somewhat the support level, waiting for its chance to rebound. Okay, so overall, DBS still looked healthy. So long as it doesn't continue go lower and breaks below $26, I think it should be still fine. There's one thing that we also need to take note is DBS going forward, for the rebound to breakout happen, it must cross above this downtrend line, which happened to be around 2683. So once it crosses above 2683, there's a good chance that it may go up to 2743. Okay, so let's keep a lookout on that. And OCBC, again, right, I have mentioned this many videos again. OCBC always looks better, has a better chart. Of course, at this point of time, today OCBC also has a better chart. So it seems like it has a chance to break out above 1074. Now, I have also mentioned that in this market condition, stocks doesn't move along. Stocks in the sector will move together. So we don't see OCBC breakout by itself while DBS is lacking behind. So well, if DBS can break out, I think it can help OCBC to break out. While UOB similar, you can see OCBC is very near to its resistance at 1074, so it needs to break out above 1074. Then next week we will be looking at where would be the next resistance that it can touch, or by the emails itself. Now, UOB, Similar, we are looking at the resistance at 24, 22. So when I say by the email itself means the daily email that I've been sending out to some of you who has been actively trading. So basically, we are looking at resistances at various levels. Like for example, UOB has a resistance at 24, 22. Now, of course, we would like it to test it immediately. Why? Because that would form the higher low here, and then higher high that starts the uptrend. Okay, same for OCBC, a breakout over here, right? Can go right up higher, somewhere around these levels, and then of course DBS, once it goes back to 2743 breakout, uptrend resume, right? So far at this point of time, the January rally still intact, so we just needed more upside like the Hang Seng. Okay, then I'm going to talk about the tech sector. So yesterday tech sector was very strong, but today very disappointing closing, especially for those who have vested interest in it. Of course, for those who have shorted these counters, today is a reprieve. You know, you get some break because the higher price action in the early morning today, right, turned out to be a sour closing, especially when you look at counters like AEM, Valuetronics, if you include Fuyu, right, in this discussion, yeah, Fuyu also had a very disappointing closing, opening and closing, especially after they make announcement that they have changed its management. Most of its old guard has left, new owners took over, and but the good thing is the CEO and the chairman is still the same. So having said that, this means that the dividend policy that Fuyu has for many years probably is good to go, good to maintain, right, for many years to come. So if they offer to bring Fuyu to privatize, I hope that Fuyu can be offered at 40 cents, and then this is where we can happily sell all our shares to them. Now, coming back to AEM again, you can see this is a poor closing. And if this counter tomorrow were to continue lower below $4, the range of $4 or 3.95, these are the levels of support that it must hold. So if it goes below, even below, then this zone of trading 3.95 to 4, then the next support to look out for is 386. And by the time when you hit 386, it could form topish formation. So we got to watch further. So whether it's really topish or whether it's just a rest and then forming a chart formation before it go up higher. Okay, so I've got to watch further. UMS today higher opening, lower closing, but it doesn't look as bad as the other AEM, but still it seems to be wanting to call for a break. Why? Because it has gone up for a few days already, and it probably need a break before it can scale new high. Now, for your information, UMS now, after getting rid of all the dividends they have paid, it is now at the all-time high. Now, so why do we need to adjust for dividend? Because dividend is the money that the company gives back to us. It is not the real market action. What we want to see is the real market action where the counter really has the intention of buying up or selling down. So we do away with the dividend, and then we see the candle by itself, day by day candles by itself, not the gaps, because every time when dividend, the stocks tend to get down to adjust for the dividend payout. Okay, so for UMS, if we do pull back, we do see the support at 117 has to hold, right, in order to form the next higher low, and then goes to the next new high. We have Franken. I mentioned last week that Franken has a bearish divergence, but indicated it by breaking up above 1.36. So I do also mention that Franken looks good for a breakout. So I had doubt in it. So therefore, I actually didn't really chase on the breakout. But nevertheless, Franken has a very nice breakout over here this particular day, last Friday to be more precise, and then yesterday continue higher, only to see today that there are some profit taking. But nevertheless, the uptrend is still intact. We see the bearish divergence negated. Let's take a look at the indicator. So let's see here. About to get negated because I need to correct a little bit. Why? Because here, if you look at the MACD height over here, is still not as significant as we would like to have. But it's still not final yet. We still need to see where Franken is for the rest of the week. So if the rest of the week it closes high, we may see this counter maintaining its uptrend. But of course, nevertheless, we can't avoid intra, this interval pullback. Okay, so do continue to stay faithful to the counters if the trend doesn't change. Okay, now Valuetronic ugly. I can only describe this as ugly. Why? Because yesterday the solid white candle was very nice, but today the closing was tremendous because it almost gave out all the gains. The only good thing that I can look at is the volume is not as high as yesterday, but then it actually sort of like make the chart not so pretty. But hey, this is Valuetronics, right? Because it is very common for this counter to have a nice white candle, a black candle almost cover that white candle the next day. So I think when this sign happen, right, this it could be a signal for a sideway to come, right? So we got to see whether this would happen or happen again. Okay, so if it happens again, well, stay tuned for a hibernation mode for Valuetronic again. Okay, so just to describe my own story is I have been holding Valuetronic since I entered at about 5.7. So from this particular range that I've entered, I held on to this counter, almost falling asleep watching this counter day by day. Okay, but nevertheless, I hope to see some more sunshine as it go northward. So if it can go northward, okay, northward. Now, the next counter, the tech counters, in fact, it is one of the giant in the tech. We seldom cover this counter. I think a few videos ago I did touch on it, but I missed it last video. Venture. So you can see Venture is having a nice, good uptrend with higher low, higher high, and next we need a next higher high. So to resume the uptrend. So if it can't break out for a higher high here, then and it breaks below 1986, then we can see some downside. Okay, so if we have a trend line that connects these lows and highs together, you can see a channel, and if it can't break out and continue above this upper trend line, then of course it may test back the lower trend line before it goes back up again. So we shall see where Ventures like to trade to. So if it doesn't break out immediately, then we can look for opportunity at the lower trend line. Okay, now let's talk about the gloves. Okay, so let's touch on top gloves, the leader of the gloves, the biggest market cap. Now, if you look at the top gloves, this is what I've drawn the last video. So I expected a breakout, so it didn't happen. So this can be erased. So unfortunately, this counter couldn't break out from its 50-day MA resistance. So the glimmer of hope was to hold at the 20 and 200-day MA confluence of support. But unfortunately, today, somehow it just want to break it, and the volume is picking up on this break. So does that signal for more downward action? So typically, technical perspective, it do suggest more downward action. but hey, anything can turn around. So we shall see tomorrow where it goes. If it goes below $2 this time round, probably it may go back to 187. Now, if tomorrow it miraculously go back above 210, then we can see a formation of higher low, a potential formation of higher low, I beg your pardon. Then this time around breakout resistance go to 240, then we can see uptrend forming. So let's watch where it is going to be for top gloves. Riverstone, still doing well, I would say. Right, you can see the double bottom they have drawn, and then where I have done a free hand, and then I expected it to go somewhat 156 because there's a resistance over here at about 158, so it's about there. So Riverstone is slowly moving higher. No doubt there's some consolidation over here. The past 3 days it hasn't been moving much, so it is still on track to hit 158, right, if possible, the next few days. Okay, so if you look at the technical perspective, the 158 resistance is confluence with 100-day, very close by, and of course this is going to be a real test for the counter. Why? Because if it can break above this resistance, it can be bullish. Same for UG Healthcare. Today, very nice closing. Look at the volume, fantastic. A nice white candle. In fact, it is a pennant. It's a classical pennant breakout today. Okay, for UG Healthcare, you can see this is a pennant and this is a flag, and we do flag pro rather. So we do have a projections from this counter, a what we call conservative projection, maybe to 7-8 or even higher. So the counter is very, very what we call sorry, you got to really focus on 78 because it must really break above 78.5 or 78, so that it can go further to 82. Why do I say that? Because this afternoon I was studying it, and let me turn on the indicators. You can see why, because there is a 100-day MA resistance right there. So you must break out from that. You must clear above the resistance just as what it has done when you clear the 50-day MA. So a convincing upward movement, clear 78, then it has more room to go to about 82. Okay, so do take note of this resistance. Then coming to Magtek. So Magtek, well, it is still consolidating. The good thing is it's consolidating above its resistance, which now has turned into support level. So if this counter can break out the next round after this consolidation above 114, coming back to the same old topic, we were always talking about 124. Okay, so then it is really going to 124 range. So the uptrend remains intact with higher low, higher high. So let's see where can Magtek go to. Okay, so this concludes the glove sectors. Overall, still look okay. Only top gloves by itself looking weird. So usually when I experience that stocks that goes in the sectors, I mean, like I mentioned earlier, stocks move in the sectors nowadays. But if a counter alone itself goes into downtrend, while the rest of the stocks in the sectors goes in uptrend, then this only tells you that there's something wrong fundamentally. Give me an example. Okay, so if you look at the property sector, look at CapitaLand. It's moving uptrend. Yes, no doubt it's consolidating, prime for a breakout because there's no so-called topish formation. It could be something like that, waiting for a breakout, then pull back, then go up further. So CapitaLand uptrend is still intact. In fact, if I look at the weekly chart, it still look bullish, though. Okay, so it's still strong. So hoping for another breakout to happen sooner than later. Then we have City or UOL rather. I would have UOL first. You can see uptrend. Well, generally it's still moving uptrend, isn't it? Then we have the Halpa, also one of the populist player, but of course they are famous for the ointment that you buy at the supermarket. So it's still uptrend. Ring Thai, moving uptrend. Now, of course, the weakest is, in my opinion, is Fraser Properties. Because most of the counters has gone up. I'm saying those that doesn't have any adverse news one. So here you can see Favorite Property still struggling to go higher. Okay, so now coming to city development. So you can see all those charts that are actually moving higher uptrend, with higher high, higher low. But this counter, well, had a plunge here. Of course, we can see some recovery here. But is this recovery, sustainable? Right? This is another question. Okay, why? Because as everyone who has been following this counter, their directors has resigned, 3 of them, in fact, or 4 of them. I only remember 3, and as I heard that they are doing a this evaluation of this China sincere property valuation. Ernst & Young are doing the valuation. So so you can see that this counter by itself goes down is because of its own weakness. It's not because of the sector itself. Okay, so is city development ready to recover? There is a very big announcement coming in February, somewhere in February. We are not sure yet. And if it's going to recover, I do expect this pullback will, if there's any pullback, it should hold at 741 level, form a support over there, form a higher low, then break out from there. Okay, so we shall see where it is going. So definitely I won't be chasing right now, but I'm going to see going forward the real price actions to come in. This is just a rebound, but the real price action comes in where you start to see higher low and then goes up higher. Of course, if we were to look at the counters like the oil and gas, they are also in uptrend. So let's shift towards the oil and gas. The reason why we are looking at these, oil and gas is, of course, they are one of the key. Right, no need further explanation. They're one of our key sectors in the exchange. We have Keppel Corp here. We are looking at the uptrend to continue if it can convincingly break the 574 level. Okay, so it must break above 574. Today it almost tested, but unfortunately the gain for most of the counters was erased for the Singapore market. And hopefully tomorrow we can start to see a real action coming in where the real breakout comes in. Okay, and then Sammarine is struggling to hit higher, approaching resistance very close to 173, 177 resistance. If you look at the bigger picture, of course, it do offer some hope because the bigger picture do gives you something like this. But you need a lot of faith, a lot of good faith in this counter, that it can eventually test 177 resistance and break out from it. And if it's so, I did mention last week that it may go back to where its old level is 20 cents. That is a crucial level because a lot of people was stuck there. And of course, if you can cross above this level, 24 cents will be the next resistance or the projected target to watch. Okay, so keeps our finger crossed over here. And then we have Sembcorp Industry, weakened after going up, after it has gone up, pull back. But if it can rebound tomorrow and cross 185, then we can see 188 resistance tested again. So it is very important for this counter to test 188 resistance. Why? Because this 188 resistance will form the higher low here. If it tested it, it form a higher low here, then it can break out. So overall, in the bigger picture, it can form a cup and handle formation, and then we can see that the upside, projected upside, is going to be a fantastic one if it can form up, but it's still too early to say, right? Don't hold me accountable for this, but I just want to say that if this happen, the projected target is 210. But if it doesn't happen, then we probably got to see sideways, and then we got to re-evaluate the chart again to see where it is likely to be going forward. Now, touching on ST Engineering, this counter is weak. For those who referred to the email, it has broken its support level. Very disappointingly, because this 20 and 50-day MA confluence together is usually a very strong support. And today, this morning, we saw a glimmer of hope as it rebounded higher. But unfortunately, it did not close high. In fact, it closed below. So this tells you that it's not ready to go up. In fact, I'm sorry if you have traded this counter. I think if you have better opportunity, you can exit this counter for now and then look for other opportunity. If not, we shall hold up until it had this real rebound. So the support level to watch is actually at this 1374 level. So let's see whether this 374 level can hold up if it tested it. Okay, so same for sets. Right, it's really sad over here where it failed to hold at this 20-50-day MA support. Once it goes below 50, I have doubts. 50 MA, I have doubts. Why? Because whether can it be bullish or not? What? The first thing that tells me today, it tried to rebound but got resisted by this MA. So it's not a very good sign, right? Unless again tomorrow suddenly it can have some miracle and then rebound up to 408 and go back to its uptrend. Its counterpart SIA, on the contrary, is a better chart because it managed to rebound from its 20-day MA, and things are looking up because it still has chance to hit back 442 and break out from there to form uptrend. So if we can have this happen, of course, this counter can be bullish. Then the Comfort Delgro, disappointing. Okay, why? Because last Friday we see a glimmer of hope as it went up to test resistance, but this resistance is rather a hard nut to crack. Why? Because this counter went all the way down and closed at 172. Okay, so forming a long upper shadow, thus creating uncertainty. The good thing is it managed to hold at the 20-day MA support, but you need to rebound. You need to break 175, then we can see uptrend. If not, it could go sideways for a long time. So, we got to wait for the times to come for Comfort Delgro. Okay, so most of the sector covered. I would say that the other observation is today we do see a lot of penny counters start to run up. One particular counter is ETC Singapore, right? This counter has a fantastic run from 39 this morning, 38 this morning, went all the way up to 58, right? It's a very strong upward, has a very strong upward movement, but the closing was disappointing. You close at 5 cents. Other than that, the counter that I want to highlight before I end off this video is this counter. Okay, these few counters are and Mapletree NAC, touching a little bit on REITs, so we can see that it had a very strong breakout today, probably due to the effect of Hong Kong, right? The Hong Kong, China. So it's a very strong breakout. We hope that we can see flat pattern, then follow through, breaking out further to 112 or even 119 level. Mapletree Industry seems to be bottoming with a base over here, and if it can convincingly break above $3, we do see it may hit above 304 or even 329. Then if you were to follow my email last week, I think, yeah, I actually posted the Fraser L and I. In fact, it's Fraser L and C because he has changed his name. We do have an ascending triangle. This counter is holding well. It's my long-term favorite. I've been holding this counter for many years, and yeah, it has a target of 170. So 174. So hopefully it can slowly go there. Okay. Sanders Reed have a very nice breakout. Okay. Over this resistance. So you got to clear another hurdle, which is 308, which is this resistance over here. So once it clear this resistance, then yep, let's hope that it can go 311 and above. Okay. So finally, the next counter that I want to share with you is this counter. It's a huge counter for some. Okay, so this is Jardine CNC. So we have a very nice flagpole over here, and then we have the flag patterns. Okay, the flag over here with volume decreasing. So if tomorrow have a very nice flag breakout, we may see the bullish momentum continuing with the let's do a projections over here. Okay, so we have a flagpole projected up, breakout point around, right, around 25.43. Okay, so let's see whether it can come through. So the breakout volume should be high as well, should be about above 0.8 million. Then we can see more upside. All right, so with this, thank you for viewing this video. Appreciate if you can, you can share this with your friend if you like to. So appreciate if you can like the video as well. Okay, so see you next week. For the time being, take care and have hopefully have a new a good market before the New Year's come. Okay, so see you and good day.